Hey guys, welcome to another Trade Genius podcast. Philip here with Bob as usual. And in today's episode, we're going to talk about Bitcoin miners and what that means for the price of Bitcoin and this big cycle that we're in this current bear market. So let's dive in.
Trade Genius.
All right, Bob. So, a lot of miners are under duress, Bitcoin miners, being that the price of Bitcoin is where it's at. And, this has always been a problem at this point in all of these last two big cycles where miners get underwater. And ultimately it comes down to production cost. I know you've been charting like the Maras and the riots and things like that. And from a investing or trading standpoint, how are you looking at things between now and the next 12 months?
Yeah, so from the crypto side, I trade two things the most often, Phil. I trade Mara and I trade BITI because I don't want to touch my Bitcoin. So in order for me to hedge, I use BITI. But also when I want to leverage or hedging, I also go Mara because BITI is a futures related inverse fund for crypto for Bitcoin, and then Amaro is obviously a Bitcoin miner. So talking about the miner aspect of it here is I think the FTX debacle is going to have some legs to it. And I think what's going to happen here is number one is going to put pressure on Bitcoin short term because we still don't know what's going to happen with Grayscale, right? And we still don't know if people have to disgorge any Bitcoin down into the open market. And, because it's such a low float, at least in the short term, it's going to put pressure on the prices down. And I think that's going to impact the financials adversely for Mara. So Mara right now is trading around 650, got all the way down to, I think, $6 yesterday. And worst case scenario, look, this thing can get down to $1.50, okay? And I put Mara as one of the better trades out there. And so I'd be concerned until I think we have a come to Jesus moment and we get basically a wipeout of all but the best miners out there. And then I think companies like Mara is going to do extremely well. But at the same time, I think we need to probably look at maybe into the first quarter here now before people stick their head out of the foxhole, Phil, and realize that Bitcoin's a different animal than what we've been seeing here in the DeFi and the Tether and the leveraged, unregulated, crypto exchanges out there. And then it's gonna basically go back to its mantle of being speculation, a hedge, a store of value, kind of play on that currency, if you will. Anything you can buy or sell for goods is a concerned currency, right? So don't let anybody tell you differently. So I'm thinking maybe what we thought was going to happen in the fourth quarter is probably pushed out 90 days because I think we got to unwind all this stuff. I think the new Congress is going to come in and they're going to have something to say on this. But what's interesting to me is what I'm hearing now, and you and I talked about this right when everything started to break, is that we don't have a crypto problem per se. We have a massive money laundering fraud problem with crypto being used as the vehicle of choice. So I think once they clear all that dead bush out, I think then you're going to see Bitcoin start working towards its halving cycle activities, which would be very bullish.
Yeah, which brings us to this next chart, kind of the meat and potatoes of today's video. I know this kind of looks like a bunch of different things here, but I'll just break it down real quick. On top, you've got the price of Bitcoin. That's your typical, price bars and that green line up there. And then below that, you have what is, I would call the production cost bands. And if you notice, we're basically at the bottom of those bands. So anytime you see where price is getting to the bottom of that band, everybody's underwater making or mining Bitcoin. And the stronger or the larger miners know that you'll run into that sometimes, and that's why they usually build up a pretty big war chest. But it's interesting here because we're actually seeing more. So there's a couple things in play. One is the price of Bitcoin, right? And because as you make a Bitcoin, you get Bitcoins for protecting the network essentially. So the price of Bitcoin has a huge role in your profitability. The other part of that, which people don't necessarily understand too much, is the difficulty. And the difficulty in layman's terms, is essentially how much electricity that you're going to have to burn to get a Bitcoin reward for protecting or confirming the transactions on the network. Okay, so right now the difficulty is climbing, and that's you can see that in the lower indicator there, where you see those blue and green dots. And sometimes what happens is that those bands are measuring whether the hash rate is increasing or decreasing. The hash rate, if the hash rate goes up, then the difficulty increases. And the reason for that is the difficulty is always trying to throttle the network so that it's producing 10-minute blocks. If the hash rate jumps up really quickly, then you can produce blocks quicker than 10 minutes. And so the system tries to throttle that inflation rate. And so it does that every 2 weeks, it evaluates. And if there's been a big jump in the amount of hash power that's been put onto the network. So if these large mining farms are putting on tons and tons of mining rigs online, then the difficulty will adjust upwards in a couple of weeks. And what ends up happening is kind of cool is that when price starts to wane, then it puts pressure on these miners. So the smaller miners first will start unplugging the unprofitable machines, because all of these miners have different machines from different generations. And so the older machines will start to become unprofitable first, and so they start to unplug it. So I've always viewed mining as kind of it follows price. So if price drops, then you'll see miners unplug machines. You'll see the hash rate typically drop. And when the hash rate typically drops, you'll get a capitulation signal, and that's what's signaling below. So when you see the first group of those circles, that's typically a capitulation, and you'll notice the bands there cross down, and you get like this red coloring. All right, that's what we call minor capitulation. And typically you get that after a big pullback. And we've recently gone through one. I've kind of extended out a forecast there and extrapolated what I think is going to happen, and we're going to get a second capitulation here. And we're already starting to see the hashing band start to turn down. And so if we get that, I think you have to look very closely when that triggers, and that's something we'll probably revisit in a future video, so stay tuned. But when that triggers, that's probably going to be your spot where you want to start gaining position for the long term on the next cycle. Now, as easy as that might sound, we also have to deal with the fact that we might be in a longer recessionary period, which is going to be another video we'll talk about, and that's what the yield curve is telling us. And the yield curves are very accurate in telling us what our recession outlook is going to be for the next 10, 12 months. And you guys are going to want to listen to that one, because this is going to change, I think, the way that this cycle plays out versus the other two cycles, which were very, symmetrically looked very similar as far as the peak and then the trough and the length of the trough. This might play out a lot longer than people are comfortable with. And so watching these indicators, I think is going to give us a pretty good idea of like where we want to be dollar cost averaging, but also then we have to measure that with our expectations of when we're going to get out of this funk. And I can kind of get the sense from Twitter and things like that people think, we're going to be out of this in the next 3 months. And I think the data now coming out is saying that you might be having to be a bit more patient than that. So that's something that we'll cover later. But the last part of this chart, and I'll let Bob chime in here, is that down at the bottom there, you have this basically histogram of red and then green. And you want to focus on the green because that's where the miners typically get underwater, and that's usually at the cycle lows. And as you can see, we've been pegged in that condition here for several months, which is longer than usual. And I think that gives you a little bit of a nod as to this cycle is probably going to be in this bear trough a little longer than everyone's used to. So, but when that comes out of that, and this could even be a intermediate move up. When it comes out of that, typically that's a decent spot for an extended move. But I wouldn't be surprised if we double dip in that as well going forward into next year. So that's this chart, but you can see where we are currently, and I extrapolated out on the top there kind of what I thought might give us a look of what the bear market might look like when this is all said and done before we do start going for that 2024 halving run, which should then coincide with the Fed pivoting and going back to cutting rates. So anyway, I'm going to get off my soapbox. Bob, what do you think?
Oh, no, I totally agree with you. And, and you talked about, too, when you see that red, the dark red, those are typically times to start accumulating Bitcoin. And my only caution on that is that I think we got to get some better transparency on the Fed and better transparency on the this whole FTX situation, And it's not so much about FTX anymore. It's about all the downstream fireworks that they created. So we have to kind of see whether Genesis is going to be able to become a stay-going concern, whether Grayscale is going to come through and not have to dump coins on the market, and start getting maybe the end of the world scenarios aren't to be. And then I think you're going to start getting some relief bounces. And then once that starts going, people they're going to stick their head out of the foxhole. I mean, Bitcoin's a weird and new thing, but it still suffers under supply and demand and greed and fear. And right now we're in fear mode. And the nice thing about it though, Phil, is that sellers aren't selling. It's the people that are forced sellers are selling. Does that make sense?
Yep.
For those of us who are really indifferent to what's happening, we feel no compulsion to sell. It's the people that are on exchanges that have to disgorge because of collateral commitments they made. We just don't know what that all looks like yet. And you don't know if you daisy chain out of an altcoin that then affects the Bitcoin. We don't know what people committed to. People could commit to things that we have no clue about. They may have committed to a wallet of Bitcoin, right, to satisfy a note somewhere, and they may have to disgorge their Bitcoin to a third party or to a creditor. So it's it's going to be quite interesting to see. That's why we have to. No time for heroes here. But if you want to start dabbling in, look, you can still buy a little bit every week. You don't have to go whole hog wild. These are where the opportunities are. But look, the Fed's going to have to relinquish this hawkish positioning, and they're going to have to all agree around the world for greater inflation, and that's just going to support assets that are not inflationary. Okay, physical gold, physical silver, certain art, certain real estate, certain farmland. You see what I'm saying? Things that not everybody can get, people are going to want to own it. Bitcoin, okay? Anything that's inflationary on the crypto world, I'm not going to speak to it, but I know Bitcoin is not that. So I think the doomsdayers are going to be wrong here, and there's going to be a bifurcation, and I think that's going to give us our opportunity. And then the miners are just going to come back from that, Phil, because their assets are all Bitcoin, right? I don't think many of them disgorged anything, have they?
The larger ones, I think, have a pretty good war chest. The smaller guys are definitely, chucking Bitcoin over the side, trying to stay afloat.
Yeah, and they're going to be gone anyway soon.
And another interesting thing that's happening is the hash rate's actually increasing. So typically at this point in a cycle with the price doing what it's doing, you typically see hash rate coming off. And I think in past cycles, you would have seen the second capitulation occur. But what's also happening is that you have these large farms in Texas coming online, and they've already committed to X amount of capacity. So, the pockets run deep. They've got enough bridge capital to make it through this. And so they're just going with the plan of bringing this hash power online. What it's doing too is it's choking out the smaller guys. So there is a bit of strategic advantage in that. It's stepping on the neck of the smaller miners, and they have to capitulate. And then of course that gives them more profitability because their piece of the pie increases as these smaller guys choke out. The other thing I wanted to address before we go, people often wonder, well, if the miners all go underwater, like even the large mining farms, they're probably either at break even or a little bit at a loss right now as far as their operating costs and net profitability. So the question becomes, well, if these guys all go belly up, doesn't that affect the security of the network? They all end up unplugging because they can't run at a loss. And that's a valid argument. However, what you have to remember is that the Bitcoin network is self-healing. So if, let's say, Riot decides they're going to have to unplug half of the machines, let's say, right, and there's a substantial decrease in the hash power in the system, what ends up happening is the next difficulty evaluation period, and remember it happens every 2 weeks, will say, wow, there's a big decrease in hash power. It's going to lower the difficulty. So when the Bitcoin network lowers the difficulty, it makes it cheaper to mine Bitcoin again. And so you eventually find an equilibrium where it's profitable to mine Bitcoin again, and then we're back to normal. So it was very ingenious how they built that into the code when they were coming up with all of this, but it really does work, and it's worked in every single cycle, and it kind of weeds out the weak players, but ultimately the guys that were positioned and hedged the best get to make it to that equilibrium point. And that's usually, you might get a couple of those imbalances like that, and then the system balances out and we're off to the races again. So you're really not going to get to a point where everyone just throws their hands up and quits. There's too much money at stake to do that. They're just going to maybe scale back a little bit. The network's going to catch down to that and balance out, and then they're going to resume being profitable again, because there's always, at every one of these bear cycles, at the deepest, darkest point of the bear winter, they've found a point where the difficulty reduces to a point and they're back to like all of a sudden being profitable again. And then from that point forward, the whole point is to survive to that point for these miners, because from that point forward, for the next 2 years, you're making money hand over fist. And I'm going to argue you're probably going to have the most profitable cycle ahead of us right now going into the 2024-2025 cycle. So everybody knows that's the big prize here, and so you don't have to worry about the network falling apart and losing security. Where it's just going to self heal to a point where it stabilizes, and that's not really going to be an issue.
Yeah, and so Phil, your one rig's going to be good to go. So it'll be we'll go from 11,000 to 2, your rig and my rig, and we'll be
Yeah.
billionaires.
Yeah.
Hey, but seriously though, for those still listening, we have a bot monitoring Mara constantly. So we get a buy signal on Mara. Our subscribers know to go ahead and make a trade entry. So you're not going to miss the opportunity to go long Mara when it's time. So, plug for us, Thanksgiving, Black Friday specials right now, guys. I'm telling you, it'll be worth the price of admission. Just catching one of these trades from our bot, you'll pay for a whole year. So check us out, TradeGeniusAcademy.com, TradeLikeAGenius.com, TradeGenius.co. It all come to the same place. Good Friday and Black Friday. I'll mix the two vacations up till Saturday. You're good to go.
It's that good of a deal.
Yeah, we're talking 60% off, 80% off of our bundles. So we do this once a year. This is our time to get back. So take advantage of it. And if you're listening and you're a customer already, you can do early renewal, and we'll just append it right onto your subscription. Thanks for listening.
Yep. Thanks, guys. We'll see you on Friday. We're going to talk about where we're headed for the rest of the year and into 2024. So we'll see you then. Take care.
Trade Genius.